In the past 3 months, healthcare, real estate, and utility stocks are up 7%, 7%, and 6% respectively. In fact, nearly every sector is higher, except energy. Energy has lost 7% in just 90 days, and the group is still down nearly 20% from its 52-week high of last year. But you're supposed to buy low, right? So Bank of America is finding value within the space. The firm is upgrading ConocoPhillips to a buy with a $75 target. It is your call of the day. They think there's a possibility, guys, of a special dividend. They say the company is exposed to, quote, all the good bits of the business and that the company has a pristine balance sheet. Anybody disagree with Goldman's call on Conoco?
Don't disagree, and they talk about what their price target is, moving it from 65 to 75, but I still think there are better names out there in terms of performance. I know they're looking for somebody that's lagged over the last 3 months, and obviously Conoco's it. ExxonMobil's still better, in my opinion, in terms of what they own and the cash flows that they've got and the dividend. When you put all that together, Brian, I think there are better names in the space right now that still have even more upside than a ConocoPhillips.
Anybody own ConocoPhillips?
No, sir.
Anybody own any of the big integrated oil companies?
Royal Dutch Shell. Look, here's my opinion on this, right? West Texas Intermediate can't get out of the 50s. Yeah, it got to 60 just a couple of days ago, but here's the thing. It can't sustain it above 60. And this is in the face of problems with Iran, with Russia, with Libya, Venezuela, across the board. So why can't oil go higher? It's because of shale production. It's a longer discussion, but right now oil isn't going higher. And until it does, these integrated oil companies aren't going higher anyway. So for me, I want Royal Dutch Shell. It's got a 5.8% dividend yield. ConocoPhillips is fine, but what is it, like 2.1% dividend yield? I have to get paid while I'm waiting because we may be waiting for a long time for oil prices to go higher.
Fair enough, but Brenda, you're out west. You ever get in your car, drive across that San Mateo Bridge and go visit Chevron?
Yeah.
The only company still based in California.
And we prefer Chevron of the majors. It's, especially after the big breakup fee they got more recently.
$1 billion for doing nothing on the Occidental deal.
But outside of the majors, we also have Concho, which we think is a great, more growthy story within the group, and access to incredible assets in the Permian. So that would be our preferred vehicle, and it is also underperformed.
But that's it. You're very selective buying individual names because the sector as a whole, and it's a sector that I cover and I know well, has been a dog. It's been terrible.
It has been tough.
It's a sector for speculators. So the underlying commodity is filled with speculators, and that's driving the price of it as much as production, more production coming out of the U.S. I just think they're pure trading vehicles, and the only time trading is when they're absolutely, completely hated by everybody or completely loved.
But isn't there some opportunity there, Stephen? Because, again, you're right. They're trading with the price of oil, but not all oil companies are created the same. They've got better management, worse management, different locations.
It's true.
But they're all trading together. Everyone's kind of dumping or buying them at the same time.
But as long as you have passive money and ETFs and you're going to see more money come in, it's very difficult to distinguish. My oil play is I'm long the airlines. I'm long United Airlines because the airlines don't hedge anymore to any extent. Yeah. So I wouldn't be long if I thought that oil was going to continue to move higher.
And Permian Basin growth starting to slow. Just something to watch longer term.